Hi there. Ready to uncover some sneaky growth stocks for 2025? We're diving into a Motley Fool article that spotlights companies with exciting potential that might not be obvious at first glance.
It's like finding those hidden. It's about recognizing the power of recurring revenue. Instead of focusing solely on top-line revenue, we're looking for companies with a consistent and predictable income stream, often from subscriptions or long-term contracts.
It's like the difference between having a stable job with regular paychecks versus constantly juggling gigs. One offers more security and potential for growth.
Exactly. Recurring revenue signifies strong customer commitment and gives a much clearer picture of a company's future earning potential compared to one-time sales. And that brings us to our first company, PTC.
Okay, so what's the deal with PTC? What are they all about?
They're a leading provider of industrial software solutions, empowering manufacturers to leverage digital technology to streamline their processes, everything from product design and production to servicing and even disposal.
So they're essentially helping manufacturers navigate the digital transformation wave, making them more efficient and competitive.
Precisely. And what's really caught my eye is their impressive annual recurring revenue, or ARR growth. They're experiencing double-digit growth, indicating strong adoption and stickiness of their software solutions.
Okay, that's pretty impressive. But what about their financials beyond just ARR? Are they actually profitable?
Analysts are predicting significant growth in PTC's free cash flow, or FCF, in the coming years. This means they're not only bringing in more revenue, but they're also becoming more efficient at converting that revenue into profit.
So they're ticking both the revenue and profitability boxes, which would make their current valuation pretty attractive, right? Especially for long-term investors looking for steady growth.
That's certainly a point to consider. However, let's remember that focusing solely on valuation without understanding the nuances of a company's financials can be misleading. There are different types of ARR, and even FCF can be manipulated.
Okay, good point. We need to be cautious and not just jump in based on a single metric. What about our second sneaky growth company, Trimble? What makes them stand out?
Trimble initially made a name for themselves with precise positioning hardware like GPS systems. However, they've made a fascinating transition, shifting their focus to helping customers leverage data to optimize their workflow.
So it's less about the hardware itself and more about the insights derived from the data it collects. What kind of data are we talking about, and who are their customers?
They cater to industries like construction and infrastructure, helping them become significantly more efficient. We're talking about data from various sources, equipment sensors, project plans, all integrated to create a unified view of complex projects.
So instead of everyone working in silos with fragmented information, there's this shared platform where data-driven insights can be gleaned, leading to better decision-making. Is that what they call their connect and scale strategy?
Yes, and they're seeing strong adoption of this strategy. It's about connecting all the data dots and then scaling those insights to optimize every facet of a project.
But I'm curious if their focus has shifted from hardware to software and data analytics. Wouldn't that mean a decline in their hardware revenue?
That's where things get interesting. If you simply glance at Trimble's revenue, it might appear to be declining. However, this is largely due to them strategically divesting non-core businesses and establishing a joint venture.
So they're essentially decluttering their portfolio, shedding less profitable segments to focus on their core strengths. It's like pruning a tree to encourage healthier growth.
Precisely. And when you look at their ARR and adjusted FCF, the picture becomes much more promising. It's about looking beyond the surface and understanding the strategic moves behind the numbers.
That's a crucial point. It seems like both PTC and Trimble are demonstrating that sometimes a company's true growth story is hidden beneath the surface. They're not chasing quick wins, but strategically building a foundation for sustainable success. But we need to dig deeper into each company's specifics to understand what makes them such compelling, sneaky growth candidates.
Absolutely. And it's important to remember that this article was published in March 2025, providing us with a forward-looking perspective on these companies and their potential.
Okay, so we've got this intriguing snapshot of where these companies were headed back in 2025. What should we explore next to better understand their potential?
Let's take a closer look at the specific details of PTC and Trimble that stood out in the article. What particularly caught your eye?
Well, PTC's approach to the entire product lifecycle from design to disposal using digital technology seems pretty groundbreaking. I'm curious to know how that's translated into their financial performance and how their growth compares to competitors.
Excellent point. The article specifically mentions that PTC's ARR growth is primarily driven by their active subscription software, cloud, SaaS, and support contracts. Let's delve deeper into those areas and see how they compare to competitors who might be relying more on one-time sales.
That's a great idea. Comparing their growth to competitors who haven't embraced recurring revenue models would give us a clearer picture of the advantages PTC might have.
And on the Trimble side, I'm particularly interested in getting a more concrete understanding of their connect and scale strategy. While it sounds promising, I'd love to hear a real-world example of how it works in practice.
Yes, let's get down to brass tacks. Imagine we're on a construction site. How does Trimble's technology help the project manager avoid a costly delay or optimize resource allocation?
That's a fantastic question. Let's explore a scenario where a construction project is facing potential delays due to material shortages. Trimble's platform, by connecting data from suppliers, inventory systems, and the project schedule, could alert the manager to the issue in advance. This early warning allows for proactive decision-making.
So instead of reacting to a crisis, the manager can adjust the schedule, explore alternative materials, or even negotiate better prices with suppliers, preventing a domino effect of delays and cost overruns.
Precisely, and that's just one example. The potential applications of their technology, especially in industries like construction and infrastructure, are vast.
This is getting really fascinating. It's like peeling back the layers of an onion, revealing more complexity and potential with each layer.
Exactly. And as we continue our deep dive, we'll uncover even more about how these seemingly sneaky companies were strategically positioning themselves for growth back in 2025.
Okay, let's take a break here and come back for part 2, where we'll delve even deeper into the nuances of PTC and Trimble's growth stories.
Welcome back to our deep dive into sneaky growth stocks. We're examining PTC and Trimble through the lens of this 2025 Motley Fool article.
Yeah, it's like we've got this time machine allowing us to understand the factors driving these companies' success back then.
And one of the key takeaways from the article was the importance of recurring revenue as an indicator of sustainable growth. It's like the difference between a flash in the pan and a slow-burning fire. One might be bright for a moment, but the other provides warmth and energy for the long haul.
But the article also highlighted how important it is to understand the context behind the numbers, especially when evaluating a company's financial performance.
Take Trimble, for example. On the surface, their revenue appeared to be declining, but that was actually due to strategic divestitures and the formation of a joint venture. It wasn't because their core business was struggling.
It's like decluttering your house to make room for the things that really matter. Sometimes letting go of certain assets, even if they're generating revenue, can ultimately lead to a stronger and more focused business.
Precisely. And that's why it's so crucial to look beyond the headlines and dig into the details to understand the why behind the numbers. A number in isolation can be misleading. It's only when you understand the context, the story behind it, that you can truly assess its significance.
Speaking of the bigger picture, this article emphasized that both PTC and Trimble were operating in industries with significant long-term growth potential. Let's talk more about those industries and why they were so promising.
PTC, with its focus on industrial software solutions, was riding the wave of digital transformation in the manufacturing sector. Manufacturers were increasingly adopting digital technologies to optimize their processes, improve efficiency, and gain a competitive edge.
It's like the Industrial Revolution, but powered by data and software instead of steam engines.
Exactly. And PTC was at the forefront of this revolution, providing the tools and solutions, empowering manufacturers to become more agile, innovative, and responsive to changing market demands.
It's fascinating how technology can reshape entire industries. And on the other side, we have Trimble, who is focused on helping customers harness the power of data to optimize their workflows in sectors like construction, infrastructure, and geospatial. These are massive industries with constant needs for improvement and efficiency.
Absolutely. Think about all the complex projects going on around the world. Building skyscrapers and bridges, managing transportation networks, and mapping vast terrains. These are data-intensive endeavors, and Trimble provided the solutions to collect, analyze, and leverage that data to make smarter decisions and achieve better outcomes.
It's like they were bringing order to chaos, helping these industries make sense of the overwhelming amount of information they were dealing with.
Precisely. And this need for data-driven solutions was only going to grow in the future.
So both PTC and Trimble were operating in industries ripe for disruption and innovation, and they were well positioned to capitalize on those trends. But doesn't that mean everyone was jumping into these spaces? What made these two companies stand out from the competition?
That's a great question. Operating in a high-growth industry doesn't automatically guarantee success. Companies also need to have the right strategies, the right products, and the right leadership to execute effectively.
Right. It's not just about being in the right place at the right time. It's also about having the right skills and the right mindset to seize the opportunity.
Absolutely. And that's why it's so important to look beyond the industry trends and really understand the company itself, its competitive advantages, its management team, and its overall track record.
So let's dive deeper into the specifics of PTC and Trimble. What were some of the key strengths and strategies highlighted in the article? What really differentiated them?
Well, with PTC, their focus on providing a comprehensive suite of industrial software solutions was a major differentiator. They weren't just offering point solutions, but a platform that could address a wide range of manufacturing needs, from design and engineering to production and service.
So instead of having to piece together solutions from different vendors, manufacturers could get everything they needed from PTC. That must have been a huge selling point.
Exactly. It's like having a one-stop shop for all your manufacturing software needs, which was incredibly appealing for customers looking to streamline their operations and integrate their systems. This integrated approach also gave PTC a competitive advantage because it created a strong ecosystem, making it more difficult for customers to switch to competing solutions.
It's like building a moat around your castle, making it harder for rivals to attack.
And on the Trimble side, their connect and scale strategy was brilliant. It leveraged their expertise in positioning technology and data analytics to bridge the gap between the physical and digital worlds, using data to optimize workflows and create real-world efficiencies.
Okay, but some analysts might argue that Trimble's divestitures indicate a lack of focus. What would you say to someone skeptical of their long-term strategy? Was connect and scale enough to drive sustainable growth?
That's a valid concern, and it's important to consider different perspectives. However, I'd argue that Trimble's divestitures were a necessary step to streamline their operations and allow them to fully commit to their connect and scale vision. They were essentially doubling down on what they saw as the future of their business, and this focus was evident in their investments in research and development, strategic partnerships, and acquisitions in the data analytics space.
So they were playing the long game, betting that specializing in data-driven solutions would ultimately lead to greater success than trying to be everything to everyone.
Exactly. And it seems their bet was paying off. The article highlighted several case studies demonstrating how Trimble's connect and scale strategy was delivering tangible results for their customers, improving productivity, reducing costs, and enhancing project outcomes. For instance, they discussed how a construction company used Trimble's platform to optimize concrete pouring operations, resulting in significant time and cost savings.
That's a concrete example, if I ever heard one. It's clear that both PTC and Trimble had compelling strategies and were executing them effectively. But let's remember this article was published in 2025, and a lot can change in the world of technology and business. What were some of the potential risks or challenges these companies were facing back then?
That's an important point. While the article painted a positive picture of PTC and Trimble's growth prospects, it also acknowledged some potential headwinds. For PTC, one concern was their reliance on the manufacturing sector, which is inherently cyclical and vulnerable to economic downturns. If manufacturing activity slowed down, it could impact demand for PTC software solutions.
So even though their recurring revenue model provided some cushion than Leno, they weren't entirely immune to macroeconomic forces. What about Trimble? Were there any red flags or areas of concern for them?
For Trimble, one challenge highlighted in the article was the competitive landscape. The market for data analytics and workflow optimization solutions was becoming increasingly crowded, with both established players and agile startups vying for market share. Trimble needed to constantly innovate and differentiate themselves to maintain their competitive edge.
So it wasn't enough to simply have a great product or strategy. They also needed to be agile, responsive to customer needs, and constantly pushing the boundaries of what's possible with data and technology.
Precisely, and I think that's a crucial takeaway for any investor. Even companies with strong fundamentals and compelling growth stories can face unexpected challenges or shifts in the market. It's about being aware of those potential risks and assessing whether the company has the leadership, the resources, and the adaptability to navigate them successfully.
It's like being a sailor. You need to be aware of the winds and the currents to chart the best course. You can't just set sail and hope for the best.
That's a great analogy. And speaking of charting a course, I think we've laid a solid foundation for understanding PTC and Trimble's growth stories. We've examined their financials, their strategies, the industries they operate in, and even some potential challenges they were facing back in 2025.
This has been an incredibly insightful deep dive so far. But we're not done yet. Remember, we were discussing the importance of the human element in investing the people behind the numbers. Let's transition to part 3 and explore the leadership behind PTC and Trimble, based on what we can glean from this 2025 snapshot.
Excellent idea. The article might not give us detailed biographies of the CEOs, but we can certainly analyze their decisions and strategies to infer their leadership styles and their impact on the company's trajectories.
Sounds like we're about to put on our detective hats and do some sleuthing. I can't wait to delve into the human side of PTC and Trimble's stories in part 3. Welcome back to the deep dive, where we're uncovering the secrets of sneaky growth stocks. We've been time traveling back to 2025, using a Motley Fool article as our guide to understand PTC and Trimble, two companies quietly building their empires.
It's like we've got a backstage pass to their journey, seeing how they were laying the groundwork for long-term success.
Exactly. And the last part, we were talking about the importance of the human element in investing, the people behind the numbers. It's easy to get caught up in the financials and the strategies, but we can't forget that companies are ultimately driven by human beings.
That's so true. The best business plan in the world is useless without a capable and passionate team to execute it. So let's put on our people-reading hats and examine the leadership behind PTC and Trimble based on what we can glean from this 2025 snapshot.
Okay, detective hats on. Where do we begin our investigation?
Well, the Motley Fool article doesn't give us detailed biographies of CEOs or anything, but it does highlight some key decisions and strategies that point to a certain leadership style. For example, with PTC, their focus on building a comprehensive software suite rather than just individual point solutions suggests a leader with a long-term vision.
It's like thinking about building a whole city instead of just a single house. That takes a leader who can see the big picture, right?
Exactly. Someone who understands that creating a connected ecosystem where all the parts work together seamlessly is ultimately more valuable than just selling a bunch of isolated products.
And that kind of vision often translates into stronger customer loyalty and a more sustainable competitive advantage.
Absolutely. It's about creating a platform that customers can rely on and build upon, not just a quick fix. And this approach also suggests a leader who's willing to invest in research and development to constantly innovate and stay ahead of the curve. Because building a comprehensive suite of solutions isn't a one-time thing, it requires ongoing commitment and a willingness to adapt to changing market demands.
But couldn't that long-term vision also be a liability in a rapidly changing market? What if they miss a critical trend or fail to adapt quickly enough?
That's a valid point. There's always a risk that a company can become too focused on its own vision and lose sight of what's happening in the market. However, PTC's double-digit ARR growth in 2025 suggests they were striking a good balance between sticking to their core strategy and adapting to evolving customer needs.
Okay, so PTC's leadership seems to be characterized by a long-term vision, a focus on building an integrated platform, and a commitment to innovation. What about Trimble? What clues can we gather about their leadership style?
Well, their shift from primarily a hardware company to one focused on data analytics and workflow optimization suggests a leader who's adaptable and not afraid to embrace change. Many companies struggle with this kind of transition, clinging to their old ways of doing things even when the market is telling them it's time for a change. But Trimble's leadership seems to have recognized the opportunity presented by the data revolution and boldly steered the company in a new direction.
But was this shift truly driven by a forward-thinking leader? Or was it more of a reactive move, a desperate attempt to stay afloat as their core hardware business declined?
That's a question worth considering.
Yeah.
It's always possible that a company's strategic shifts are driven more by necessity than vision. However, Trimble's Connect and Scale strategy wasn't just about jumping on the data analytics bandwagon. It was a natural evolution of their expertise in positioning technology and their deep understanding of their customers' workflows. They were essentially leveraging their core competencies to create new value in a changing market.
So it was a calculated risk, but one that seems to have paid off. They were essentially betting that their expertise in the physical world could be translated into the digital realm.
Exactly. And I think this willingness to take calculated risks is another hallmark of great leaders. They're not afraid to make bold decisions, even if it means disrupting their own business. Trimble's decision to divest some of their non-core businesses and form a joint venture in agriculture is further evidence of this adaptable mindset. They were willing to make tough choices to focus on their core strengths and position the company for long-term growth.
So Trimble's leadership is characterized by adaptability, a willingness to embrace change, and the ability to make strategic decisions to position the company for success in a rapidly evolving market. It sounds like both PTC and Trimble had leaders who were capable of navigating the complexities of the business world.
Absolutely. And it's important to remember that we're looking at this through a 2025 lens. These companies have continued to evolve, and their leadership may have faced new challenges and opportunities since then. It's a reminder that leadership is not static. It's a dynamic process of learning, adapting, and growing.
So while we can learn from their decisions and actions up to that point, we can't assume they'll always make the right calls or that their strategies will always be successful.
Exactly. And that's why it's crucial for investors to stay informed about the companies they're invested in, to track their performance, their leadership changes, and any shifts in their strategy or competitive landscape.
It's about being an active investor, not just a passive observer.
Precisely. But let's not forget the broader context of this Motley Fool article.
Mm-hmm.
Remember, it was published in March of 2025, a time when the world was still grappling with the aftermath of the pandemic and facing new economic uncertainties.
Right. It was a period of transition and adjustment, and businesses were navigating a lot of unknowns.
Exactly. And I think it's important to acknowledge that context because it likely influenced how investors were viewing the market and evaluating companies like PTC and Trimble.
So are you saying that the positive outlook presented in the article might have been overly optimistic given the uncertain economic climate?
Not necessarily, but it's always important to be aware of the prevailing market sentiment and how it might be shaping perceptions of individual companies. The article certainly presented a bullish case for PTC and Trimble, highlighting their strong fundamentals and growth potential. But it also acknowledged the inherent risks and uncertainties associated with any investment, especially in a volatile market environment.
So it's a reminder that even the most well-researched analysis can be influenced by external factors beyond a company's control. It's like trying to predict the weather. You can gather all the data and use the most sophisticated models, but there's always a chance that an unexpected storm could roll in.
That's a great analogy. And it highlights the importance of diversification in any investment portfolio. Don't put all your eggs in one basket. Spread your risk across different asset classes, different industries, and different companies.
So even if one company faces headwinds, others might be able to offset those losses.
Exactly. And as we wrap up our deep dive into PTC and Trimble, I think it's worth reiterating the importance of this concept of sneaky growth. These aren't the companies that are grabbing headlines every day, but they're the ones quietly building strong businesses and delivering solid returns for their investors.
It's like discovering a hidden gem in a dusty antique shop. It might not be flashy or trendy, but it holds real value.
And I think this Motley Fool article provided a valuable roadmap for identifying these sneaky growth opportunities. Focus on recurring revenue, dig deeper than the headlines, and don't be afraid to venture off the beaten path.
That's great advice. Thanks for joining me on this deep dive into sneaky growth stocks. Until next time, keep exploring, keep learning, and keep investing wisely.